Okay, question from Antonia Cavallaro. Charles, are you aware Google, Apple, and the spiders now have weeklies? And if so, don't you think that that is a beauty and don't have to wait for a month? As you don't have to wait for a month.
Well, yeah, I am aware of that. And, um, you know, with a week to go and only a week to go, usually they start blossoming with 14 days to go. So they're already kind of expensive, the butterflies. So it's the nature of the beast is quite different, and there's not as much cushion. It's going to go way against you or way for you real fast. So it's a slightly different game. So I mean, you could play it. You could definitely adapt these types of things. You'll have less adjustments, obviously. It's basically going to be vertical to vertical, down to the wire, like it was down to the wire in the last few trades that I made, because that was down to the wire. But the lion's share of the money was made way before the end.
Question from Sid Sastry. What is a blend DC and the blend SF?
The blend DC and the blend SF stand for Washington DC blend and San Francisco blend. And what those were is I did a very similar program to what I'm going to do in Risk Doctor today. Over 5 weeks, the Risk Doctor today is we're going to meet on August 11th. We're actually going to start emailing the people back and forth and finding out their favorite candidates that they'd like to trade. I'll perform diametric grids. I'll find out what's bullish and bearish. I'll see what's coming close to support and resistance that will eventually be our candidates for the October 11th trades. But what we did was all in one Sunday, we met and we examined like 20 or 30 diametric grids and picked some, put them on, or put our orders in so that they could get filled on Monday, and then manage those risks and followed in the forums for the next several weeks. And those members watched and followed along with the trades. It was like a trade along. Those were trade alongs. And that was all met. We met for 5 or 6 hours on the Sunday, and we met in the forums and email ever since. And I made little mini videos so that people can download since. What this is going to be is like a blend, and what you're blending is putting everything together, putting theory with reality. We're using diametrics, we're using position dissection, we're using live markets, we're bobbing and weaving, we're buying at support, we're selling at resistance, we're deciding where we're wrong, we're getting out of what's bad, we're managing, our potential big losses, etc. And we're going to do that live over 5 weeks proactively, but we're going to meet every week for an hour while it's going on, and in between in the forums and email and with little mini videos that I give everybody. So scheduling wise, we're meeting every week for an hour while the market's open, and the blends we met on a Sunday in each case, and then we followed it after we parted ways. Everybody followed it, and we kept track of all the positions and monitored our results.
Okay, Aljaz Jaminik would like to know, do you use the new weekly options for more precise adjustments in addition to the regular monthly ones? Thank you.
I have not. I have not done that because most of what, but you could, and I would. It's not that I won't, it's just that I haven't. And the reason I haven't is because right now in this phase with what I'm trying to project here, and because Risk Illustrator only has a single month that it monitors, certainly Position Dissector that comes with that package can monitor several months, but and dissect several months, taking out calendars and double diagonals and things like that. But when you have different expirations, you now have embedded calendars, and since I'm not dissecting any calendars with Risk Illustrator yet, until the next version that will have that, I've been just talking mostly about not having the calendar aspects in there. But certainly, if you need some short-term protection and there's only 3 days to go, and I was worried about those when we were down at 464 at Google, I could have bought the 460s for pretty cheap with a few days to go with a weekly and taking care of my risk at that point.
Paula Halloran would like to know, is Risk Illustrator only for equities, or can it be used on futures options also?
It can do futures and it can do currencies as well, and equities and indexes.
Sid Sastry would like to know, Charles, I have your book and PDF, OTTHR, and can I get a hold of RD1 and RD2 and options metamorphosis and chapter 10? It'll take me a while to get there.
Yeah, in fact, all of those are in a special discounted package. It's priced at only $6.99, and I think by themselves it's over $1,400. So that's called the companion package, and it includes the PDF. Again, you already have that, so I mean I could credit you back that or give you a discount code for anything you already have. Yeah, just send me an email, Charles at riskdoctor.com, and we'll put together any of the pieces that you're missing and give you a better price too if you're buying, bundles of products.
Question from Tom Harney. How many options did you trade?
Over 1 million, I think. I mean, in this last trade, in the Google trade, how many options were there? The total was at the bottom of that page 3, I think. I'll just pull it up here. But I've traded millions of contracts over the years.
Yeah, he clarified. He's referring to the Google trade.
The Google trade. It's summarized at the bottom of page 9. And the total was 820 contracts for a total commission of $440 is 50 cents a contract, $410.
Aljas Jaminek would like to know, how much of your capital do you leave free for possible risk adjustments? Sorry if this has been answered before.
No, it hasn't. It's answered in my forum several times. We talk about allocation and an ultimate kind of portfolio. I like to find like 30% of my trades. Like say I got 10 trades. I'd like to have 3 aiming north, 3 aiming south, 3 aiming sideways, and maybe 1 kind of explosive trade like cheap puts or cheap vertical or something. And I usually like to do broken wings or credit spreads or butterflies or condors, and basically vertical to vertical, ratioed verticals, no matter what I'm doing. And I'll not risk more than, say, 7% of my trading portfolio on any one trade. So if I made 10 trades and I had a $100,000 account, I would put 70,000 to work. I'd have 30,000 powder dry for adjustments and, massaging things around. And, potentially grade A trade that maybe make an 11th trade or something if something really gets set up that I don't have a position in. Until I can liquidate something else, I'll have my powder dry for that.
Tom Harney asks, what is your net after commissions?
Sorry?
What
I didn't hear
is
it.
your net after commissions?
Oh, on this trade, it's also at the bottom of page 9. It's $16,000 after commissions. Let's see. Yeah, about 16,000 was the profit.
Okay. Chuck Eichelberg would like to know, how do you get the options price data into Risk Illustrator? You answered that.
That's entered on that trade analysis page. We did cover that. It's up in the left-hand corner. You'll see it, for example, I'll just tell you what PDF page where we have the trade analysis page. I'm just scrolling through it, but you could start asking the next question. Oh, Yeah, on page 15, for example, up there on the left, you can see where all those yellow columns are from column C to G is where everything's set up. Just 10 cells. You put some information, interest rates, underlying price, choose your model, choose your skew shape, and go.
Okay, next question is from John Dory. Could you explain how the latest version of Risk Illustrator incorporates various volatility skews?
Well, yeah, and the next version, well, there are six different shapes. One's like a demand shape, where the calls are higher, the out of the money calls are higher than the out of the money puts. There's a supply shape, like what is an equity or a skew, indexes. Let's see. I'm just trying to open it for a moment to just let me click them on. And then there's a smile and a crash shape, like a U shape. And then you can enter the kurtosis and the amount that the wings are pumped up versus the distribution level, how wide the distribution is. And there's a full explanation in a free download. The manual is at my website. Like if you go to the products page for that product, it will have the manual, and go to the SKU section and it tells you exactly how that's all done. You can read about it.
Okay, the last question I have is from Paul O'Halloran. When you initiate a position in conjunction with Diamonetrics, are you typically looking to sell premium near the money and get long wings to limit risk cheaply and, for example, as the underlying falls, buy even cheaper out of the money call wings, and vice versa as you rise back up, as well as buying other cheap butterflies, and then as time goes by, harvest the blossoming butterflies as the stock price visits the expensive butterfly strikes, especially if implied volatility drops. Did you get all of that?
Yes. Yes. And no. Um, I primarily like to set my short strikes either in the way of a vertical. I want my short strikes to be where the underlying's not going, hopefully. And obviously that's more expensive, that which I'm selling, than what I'd be buying further away. So I'm going to have a credit. And so ideally, the short strike is where it's not, the underlying's not going to go. For the butterfly part of it, I want my short strike to go where the underlying is going to go, because that means that my butterfly is going to blossom. And we bought a $40 butterfly. We bought it for $9. A lot of times when I buy a $9 butterfly, I'm looking to double or triple my money. I'm not looking to have 9 go to 40. I'd be happy with 9 going to 18 and making $9, right? I'd be very jumping up and down if I could do that, double my money on that. So, so in answer to your question, my longs are going to be surrounding what I'm really looking at, where my shorts ought to be. And for the butterfly, the projected target, I want my short strike to be there in the middle of the butterfly or condor, or short strikes in the case of a condor. And I want, in the case of the vertical that's financing the purchase of those butterflies, I want those to remain out of the money. So they're going to be above resistance in the way of call credit spreads, or below support in the way of put credit spreads. I hope I answered your question.